Welcome to the weekend market wrap up over here for StatsEdgeTrading.com. This is what we do at the end of every week. We take a step back, we take a look at the stock markets, the crypto markets, the FX markets, try to figure out what's moving and when, get us kind of prepped into next week. If I have any discretionary picks that I'm looking at, I give kind of my thoughts on those or updates to other trades that I've made. And as always, after this video, I run my algorithms. I record another video for members only, in which has the output to all those algorithms with the entry prices and the exit prices and all that. So if you're interested in any of that, make sure you go over to StatsEdgeTrading.com. But let's take a look at the overall markets because, man, what a week. What a week we had. Let's start here with Bitcoin. Funnily enough, Bitcoin actually being one of the tamest instruments I watched this week. Not really too much to add. I know people are getting excited in both directions here on Bitcoin. Overall, when I zoom out like this on the weekly chart, this does look like a good looking pattern. It looks like a potential cup and handle style play. But at the end of the day, when we zoom in here, we are just kind of hard stuck inside this range right here. And we need this to resolve one way or the other. I had mentioned last week that I did buy a little bit down here. I'm just still holding that. It's not a huge position because we could very easily just chop for a long period of time. I don't want to tie up a lot of capital. When you're trading, you have to think about absolute costs, like, am I going to lose money on the trade? But you also have to think of opportunity cost. If you're in a trade forever and it's not making you any money or losing you any money, sometimes those are the worst trades because you don't have anything to do, and then you can't take other opportunities to spread out your risk and potentially make money somewhere else. So I could very much see Bitcoin doing this. And the reason for that is if you just look back on the chart of Bitcoin at all, it has many periods of time in which nothing happened for months or even a year plus, where just nothing occurs at all in Bitcoin. You have these insane kind of choppy ranges where nothing's happening. So really, I wouldn't be shocked if we're just getting into another one of those. I've talked about all the time where I think the more institutional players that get into Bitcoin, the less wild, volatile action you'll see, and the more choppy action could be that's the case. So again, I want to see a breakout above this upper range in order to get very excited. I'm just taking some plays here and there as I see them. Same with Ethereum. Although relatively weak in Ethereum, which we've been talking about for ages. If you look at a lot of these things, Doge, the same thing. Everything's just kind of very choppy in the cryptocurrency space right now. Let's take quick look at gold, which just broke to new all-time highs. As a long-term holder of gold, you can see I have this cup and handle drawn out. This was the idea behind this as a very long-term chart. I've been in gold here trading around kind of a core position, but just breaking out to new highs, new weekly all-time closing highs here. Just exactly what you want to see if you're bullish. Is it getting a bit overdone? Maybe, but really we had about 3 to 4 weeks of tightening action right here before this breakout. So this could have legs. Again, I'm trading around a core position. So what I mean about that is I bought a chunk of gold as we broke out in the 2000 area, that I'm still holding that chunk, but as we move higher, I'll sell a bit. As we maybe set up with another pattern that I can play off of, I'll add a bit more in, that kind of thing. So I would be in a sell a little bit mode here, still holding that until we get some sort of dramatic trend change, and then I have to move out. Very interesting to see silver catching up. So this is an area that we were talking about a few times in silver. You can see the prior highs right here. That was also the high right here. And it looks like we are breaking out of that position now and pushing higher. This could be another kind of cup and handle play, just like we were talking about there with gold. Very interesting to see silver here go with it. This is how it should work, is that silver should be, or has historically been, a higher beta gold. And that's what we're seeing in this case, is that with gold moving, gold up 1% today, silver up 3%. That's, as to be expected. Take a look at the dollar index. We're still fighting this lower zone that I've drawn here. You can see all these lower wicks right here. We're now 1, 2, 3 weeks in a row, kind of dealing in the lower end of this range. To me, it seems like the resolution is probably going to be lower on the dollar, just because it's very rare to have multiple tests of a zone like this. and not have it break. It's like if the whole Jerry Seinfeld example, he was, I think, breaking up with someone or something and saying, hey, you push over the vending machine enough times, eventually it tips. You can't just shove it all over in one go. You rock it back and forth. And that's kind of the analogy I like to use every time you hit a support zone. Each time you're kind of getting close to tipping over, and eventually you get some sort of a break, and that would push the dollar lower, which would do things like the euro would end up, because euro is a big part of the dollar index, we could see the euro pushing higher. We're seeing it came up to this prior high right here. It struggled at that prior high, pulled back a little bit. So if the dollar ends up selling off, then it would make sense that the euro would be pushing up. I want to look at euro pound here as well as another pair that I like to trade just because of its choppier nature. I find it sets up for some good intraday trades, and we continue to hit these lows right here. Maybe bouncing off this low and pushing higher is kind of what I'm watching if we hold that support with the euro in compared to the pound. Last but not least, let's take a look at the yen right here. The yen continues to sell. Right, so we're continuing to break down. I wanted to highlight this because we had this anchored VWAP from this really major low. This was the first time that the bank kind of stepped in and defended its currency a while ago, and you can see a little bit of sell off here. And this was like that flash crash where the Bank of Japan came in and just really started defending their currency, and then right there we pushed down. So the anchored view up from this low is right here. We paused at it for a week. We sold off and closed below it last week, and then it looks like we're going to continue this week. So no need to be super bullish this pair, or I guess bearish the yen in this case. And then the Canadian dollar, I just wanted to look at too, because we had this prior zone right here where we sold off, we bounced back up to. If the dollar starts to break down, we could see a reversal from this US dollar CAD into lower lows. Now let's get into the stock market here, and we're going to start here with the SPY, which we actually go into the daily chart because we have to talk about what happened here. On the daily chart in the SPY, it was absolutely bonkers when we had this bounce. So this candle I want to focus on because we had this sell-off that happened. There was some CPI, PPI, some sort of I. We had a nice sell-off here, and then we just bounced and rallied and closed much higher here. And if you see, this candle looks about the same, where we had a big sell-off and then intraday it caught a buyer and then ripped through to close at high. You can see what happened to the SPY after this zone right here, and we're starting to see that continuation. Now we are struggling here with these prior highs. Not surprising. We had a high right here and a high right here. It's not surprising that we're gonna potentially come here and exhaust ourselves. I'm still in the choppier for longer camp. I still think that could be the case. Uh, but what I wanted to point out is if we look at the RSP, or the equal weighted S&P 500, we're getting there, and that's still moving higher. And you can see we're getting to the all-time highs, and that's the equal weighted version of the S&P 500. So these are the same stocks, just weighted differently. That's doing well. But take a look at the Qs. This is what I was mentioning on my Trader TV this morning. Yes, the Qs had a bounce just like the S&P 500 did, and up 3 days in a row just like the S&P 500 did. But look how far we are from all-time highs on the Qs when we are much, much closer on the S&P 500. And this trend line right here showing that we were talking about a horizontal trend line on the SPY, but we are way, not vertical, but diagonal on the Qs. And if you look at SMH, it's even worse. So you look at the SMH lower, right? This is even a worse trend line. So just showing that the rotation is in, the rotation that we're seeing out of the S&P 500 is moving into different aspects where we were just riding semiconductors for a long period of time. Now we're not. So we can take a look at some things that we're doing well, one being XHB. So XHB, we are almost breaking out to all-time highs, but we do have an all-time weekly closing highs in home builders, right? If we zoom out, you can see all-time weekly closing high in home builders, not an AI centric play. If we take a look at some of these other names, like we talked about gold, but we could talk about COPEX which is a copper miners ETF, that's still trending lower, but pushing up here. So the idea is that I want to start looking at names that are doing potentially better, at least on the shorter term, than the S&P 500, because that's kind of a sign to where money could be flowing. We have KRE, or financials, small cap regional bank financials, breaking out. We have the IWM still lagging here as well. So just showing that the cap scale does matter. So sorry, I should just articulate that a little better. IWM is your small caps, your little guys, and KRE is the regional banks, the little banks. So if we take IWM down from all-time highs and we compare that to the SPY, which is your big guys, or your RSP, just basically showing that it's not NVIDIA that's pushing this, we have RSP and the SPY hitting new all-time highs. So you have large cap doing well, you have small cap still not able to get off the bench, and then you have MDY, which is our mid caps, that's also still not able to get off the bench. So although we are not focused entirely on NVIDIA and large cap giant growth names anymore, we are also not seeing this trickle down the cap scale. So people still want to be invested in big names. They still want to be invested in the large cap names. However, it's just not the same large cap names that they were getting invested in prior, in which that's generally what we've been seeing all year. The market goes up when Nvidia goes up, the market goes down when Nvidia goes down. This is changing. So we have to focus on big cap names, but not necessarily AI related ones or even tech. So we take a look at things like cost, right? So Costco maybe hitting $1,000. Look at this monthly chart on Costco, just absolutely insane. We have names like even let's just go to the XLF banks as a whole touching this prior, where's my drawing tool? There it is, touching this prior area of support. So we're going to see if this ends up pushing higher. We could look at names like JP Morgan and Goldman Sachs and names like that. So my focus and what my scanning is going to be for this weekend is just exactly this. We know the small caps are not participating, so I'm going to kind of avoid looking at those for discretionary names. We know that tech isn't necessarily the thing right now either. So what is the thing? I'm going to be looking at names like XHB for next week as these are breaking out to new all-time highs. Not what you see in a recession or in whatever they're trying to scare you with in the markets. You don't see home builders breaking out to new all-time highs. Just because tech is lagging a bit doesn't mean it's the end of the world. So thank you guys very much for coming by. As always, if you want to make sure you get access to the free email list or try out StatsEdge Pro, just go to StatsEdgeTrading.com. You can sign up for it there. I appreciate you guys very much for checking this out. And until next time, get away from the screens.